Okay, now we are moving on to homework example number 6. They give us a lot of information. They want us to create a schedule of cost of goods manufactured. So first we're going to figure out our direct materials. So we start with our raw material inventory at the beginning. We add our purchases of raw materials. And when we add the two together, we get 42,000. That's our total raw material available. We deduct our raw material inventory ending, which is 4,000. That gives us 38,000 raw material used in production. But we're looking for our direct materials. So to find that out, we have to deduct our indirect materials, which are 3. So 38,000 minus 3 is 35,000, and we're going to just put the 35,000 right next to the 3,000. We're then going to add our direct labor of 54,000 and our overhead of 36,000 that we applied, and that gives us a total of 125,000. That's our total manufacturing costs. We then add our beginning work in process inventory of 36,000, which gives us 161,000. We subtract or deduct our ending work in process inventory, which was 24,000, and that gives us cost of goods manufactured of 137,000. I'm going to just go ahead and erase part of this so that we can go ahead and complete the cost of goods sold, because in your homework you have to do that also. So for the schedule of cost of goods sold, we're going to have our finished goods inventory beginning, and that is going to be 72,000. We're going to add our cost of goods manufactured, and we figured that out. That was 137. And if we add those two together, we will get 209,000. That's our cost of goods available for sale. So that's 209,000. If we deduct our finished goods inventory ending, which is given as 75,000, we will get an unadjusted cost of goods sold of 134,000. They tell us that 6,000 is under applied overhead, so we have to add that. So we need to add the under applied overhead. And that will give us cost of goods sold of 140,000. Number 8 is very similar. So let me just change what I've changed in the example. Instead of telling us, what they told us here was they gave us the underapplied overhead figure. In number 8, they don't. Instead, what they do is they give us the manufacturing overhead that is actual, and they also give us, and that's all they give us. They've given us the overhead applied and the manufacturing overhead actual. We have to figure out the difference. So it's going to mostly be very similar to this problem. But what you're going to have to do when you're figuring out your cost of goods manufactured, that schedule, in the end, to figure out what your underapplied overhead was, it would be your actual overhead. And in our case, that actual overhead is 41,000. The manufacturing overhead applied to work in process is 36,000. So that tells us we have under applied overhead of 5,000. So I'm just going to go ahead and change this. So in number 8, if we were doing number 8, Our underapplied overhead is $5,000, so our cost of goods sold is $139,000. Okay, so we have a slightly different cost of goods sold. Let's go ahead and do the income statement based on this. So we're going to have sales, and those are $400,000. We're going to subtract our cost of goods sold, which was $139,000, and that will give us a gross margin of $261,000. We also have selling and administrative expenses. Our selling expense is $120,000, and our administrative expenses are $80,000. So we're going to go ahead and add those two together. That gives us $200,000, and put that right here. So if we take the $261,000 and we subtract the $200,000, gives us net operating income of $61,000, and that would take care of number 8. Number 7, Bob uses a predetermined overhead rate of $18.30 per direct labor hour. Predetermined overhead rate was based on a cost formula estimating $164,700 of total overhead. Estimated activity level is 9,000 direct labor hours. Company incurred actual total manufacturing overhead costs of $165,300 and 9,180 total direct labor hours during the period. And we have to determine the amount of under or over applied overhead for the period. So let's go ahead, erase this. And we know our manufacturing overhead applied was $167,994. Our actual overhead incurred was $165,300, and that gives us manufacturing overhead over applied of $26.94. And we know that because the amount we applied is greater than the actual amount we incurred. So that's why it was over applied. We applied too much. To figure out the overhead applied, we took our actual activity of direct labor hours. So our actual activity direct labor hours were 9180, and we multiplied that by the predetermined overhead rate of 1830. And that's where we got our 167,994 from. And the last thing, question 2, I didn't put question 2 in, but on your homework, it's asking if over-applied overhead costs, if it's over-applied overhead close out to cost of goods sold, what's the effect on gross margin? Gross margin would increase by this $26.94. So whatever figure you get in number 1 on your homework, that's how much gross margin will increase. That's because our cost of goods sold is going to decrease by that amount because we applied too much overhead. So when we go ahead and close out the manufacturing overhead account, we would be debiting manufacturing overhead and crediting cost of goods sold for that $26.94, and that's going to reduce our cost of goods sold. And that is it for all the homework. I just want to go over, all the quiz information is in here, but I wanted to go over 2 problems you'll see on the quiz.